Okay, I want to explain the theory of how I'm operating with selecting which stocks to buy and sell and what time to buy and sell them. So I'm plotting all stocks with the assumption that they're growing at an exponential rate and in some cases a linear rate. But for this example here, it's exponential. So what I have here is a stock that starts at $20 and increases with a 3% rate. And so the assumption is that over the period of time, it's not going to follow the straight exponential path. There's going to be some amount of variability. For example, you're going to stock investors are going to take money out of the stock market on a Friday, and during the course of the week, they're going to leave the money that they make in the market, and so it's going to build up a little bit, creating kind of a sinusoidal pattern. It's going to go up and down over the course of the week in a relatively small increment, and that's going to look kind of like this. Now, as you can see, it looks very much like the blue line, so much so in fact that you can't see the blue line here. But if we zoom in, you can see where that little bit of variability comes in during the week, and that's one example of variability that you're going to see in the stock market going away from the exact exponential line. Another example of variability might be, say, every 3 months, 4 times a year, the stock pays out dividends. So prior to the dividend date, there's going to be some excitement and people are going to want to invest in that company. And then after the dividends paid out, people are going to sell off on it. So that would look kind of like this. You're going to see just periods of up and down. Relatively predictable. But again, it's the stock market. The actual pattern isn't going to look anything like this because there's going to be just a lot more variability in it. Say, for example, a company is affected by elections. We've got elections every other year. So every 2 years, there might be significant variability going on, and that'll look like this. So as you can see here, what we're trying to do is call the blue line the stock's value. This is the starting at $20, and then it's the rate of 3% per year. So this is our 100%. This is what the stock's actual value is, according to the, the trend line that we have. But you see that the value that it's being traded at is going to have an amount of variability. And as you can see, this line looks a little bit more realistic, but it's still too exact precise. It's not quite realistic. There's another adjustment that I've made, but again, it's a straight pattern. There's going to be some more randomness to it, but this demonstrates the idea that what we're trying to do is we're trying to find these low valleys and these high points. This is where we want to buy, and this is where we want to sell. Say this is 60% of the stock's value. This is 130% of the stock's value. That's where we're trying to buy and sell. And in some cases, this may take 6 months. This may take 2 years. So you may even try to buy here and sell here, and that might only take 3 or 4 months. So that's the idea of when's a good time to buy, picking the buy and sell. Now, for me, what I'm doing is I've got 600 stocks that I've created the trend line, and I'm plotting the current value against what its expected value is to see if it's just a timing thing, if it's a good buy or not. And there could be other factors that there may be a reason that it's had a significant drop. But this is the explanation for why I'm picking the values. And the other videos demonstrate how I'm making this graph